No, you didn't.
I did.
No, you didn't. You did,
I did,
didn't
and
you?
I will again.
I was so proud of you. Oh my gosh.
Yeah, we're still talking about the Yingling, right?
Yeah, I think so. That's what I was talking about.
Yeah.
So how many Yinglings did you get?
I have 24.
So
soon to be 23.
Soon to be 23. Oh, so
this is my first one out of the case.
Nice, and it's here with us. Oh my gosh.
I know.
I feel so special. Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, two bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy.
That is the Yingling, guys, and welcome back to Drunkenomics, the drinking podcast with an economics problem. I said an economics problem. We've got more than one.
It's so many. And a single one? No way.
Only one this week, guys. Buckle up. Yeah. But welcome back, or welcome for the first time, if this is your first time.
Yeah.
I am James Goldwater. I want to say less gracious host, just based on everything I've seen, but I haven't checked the VIX, and that just shows how unprepared, how excited I am about the beer.
I know, you just decided to skip looking at the VIX and go straight to the beer, but to your defense, you're absolutely right, the VIX is down. It's at 1695, so we're almost at a 1-to-1 ratio. In terms of, normally speaking, like just a little context of volatility index.
No, Aaron, you're the more gracious host now.
Yeah, that goes without saying. Come on, man. Like, I'm obviously more gracious here.
No,
okay.
The worst part is I just confused myself. I was like, I'm least gracious when things are like this. Aaron's more gracious. Hang on, that's
a little bit offsetting, but yeah, dude, the VIX is down. That does kind of surprise me. I'm not gonna lie, but
it does with the news and the current climate.
I know, but the VIX is down. It's almost at a 1-to-1 ratio, right? So 16. Whenever you see the VIX at 16, it's like volatility.
Yeah, because 16 is 1-to-1. Was it 1695?
1695. Yeah. So like normally speaking, like 16, a VIX of 16 means on any given day, the trading range is going to be up or down 1%.
Essentially,
right?
That's essentially one standard deviation.
Yeah, really. Or the expected volatility for a day is going to be 1%. Yeah. So, yeah, pretty rad, I should say. But
which makes Aaron the most gracious form of all. Aaron, what's that last name of yours? Just so we all know who you are.
It's just Wong, W-O-N-G.
And more importantly, who all the other Aarons are.
Yeah, exactly. Well, wouldn't you believe it? There are like probably 700 other Aaron Wongs out there, but whatever. I'm one of them. Happy to be here. Happy to be drinking with you all. I got some nice Irish whiskey. I wish I was drinking Yingling, though. I really do.
Oh, man. No. Well, you had one 2 weeks ago, and I was so jealous.
I know. I did. And
so envious.
That seems like such a long time ago.
It tastes so good once it passes your lips.
Stop it. Stop.
That's the best lines from that movie.
But yeah, and what'd you say your name was again? Did you say it already?
So I am James Goldwater, less gracious host, least gracious of all. In these times where the market starts to behave calmly, I won't say rationally, calmly, there we go. I go, no, what? No. You buried your head in the sand, you stupid ostrich.
Well, at some point, we got to flip the script. At some point, once you become bullish again, which I guess probably at that juncture, I'll become bullish again too.
Secularly bullish. I think I just need something.
I understand that, but
yeah, no. And Aaron, the worst thing is I'm waiting for that day too. I am still waiting for the one thing where I look at it and I go, you know what?
Well, to be honest with you, I need to see some real capitulation, and then I'll be a post-capitulation bull. In every aspect, right? Short-term, midterm, long-term. I'll be bull.
I need them to actually get the foundation set instead of just like papering over cracks. And then I'll be like, look, no, this is solid. Yeah. We can work with this.
Exactly. So with that said, for more content, if you want to check out some of our commentary, which I feel like we need to post more because I've been slacking off on that because work is busy.
Yeah.
But if you want to find us on social media,
you can check us out in the metaverse. Oh no, metaverse is dead. Instagram and Facebook. Metaverse gone.
That's true.
Zuck decided it sucked and it's
furnace is gone.
So you can find us on Instagram and Facebook at Drunkenomical, Drunkenomical.
God, amazing.
Or on Twitter, which is a totally different social media platform, and apparently now a crypto exchange.
I don't know.
I'm not saying it's a bad idea, but it's a bad idea.
Well, I mean, the weird thing I saw too was Apple is now a bank. But
yeah, but they've got.
I don't want to delve.
Apple has enough money.
Okay,
surprised it took this long.
I feel like the big problem with them starting a bank was like 5 years ago was the whole antitrust thing. So maybe they're like, maybe the political climate is a little bit more clear, which I don't think so. But whatever. Like they decide to open up a bank or whatever
Maybe
they want.
They're just seeing some wiggle room in California.
They see this empty sector, this empty void, and needs to be filled.
They see an opening, they're going for it.
We're sitting on $270 billion in cash. I mean, what else are we going to do, right?
Yeah.
But with that, I should also say, we have to throw this disclaimer in.
Absolutely.
I don't want to, but I also want to. But I should also say, none of this is financial advice, so don't,
absolutely,
don't listen to something we say and think, okay, this is an opportunity in the markets that we're going to try and take advantage of. This is an investment opportunity that...
Or don't do it without doing your own research and convincing yourself that we're right, because we're not. This isn't financial advice. This also isn't a communication. This doesn't reflect the opinions of our employers. It's not their opinion. If it happens to coincide with their opinion, it's entirely coincidental. It has nothing to do with. We're not talking to you about.
It's not official communications from what they're saying, and
it's not information we're getting from inside the house. It's just us going. This is what we think based on what we're seeing, and we're not seeing it, and we're not necessarily seeing or hearing anything that you could not also see and hear if you looked in the same places that are openly and publicly available. So that's
exactly. Yeah. Everything we're talking about is already public information. If you just go look it up, you'll be able to
go down
find
the right
out.
rabbit hole.
Exactly. You'll be able to find the news article that we're talking about, or some sort of compliance approved publication from some financial institution that we might be citing. So whether it's Goldman Sachs,
almost certainly
or
not behind a paywall.
Exactly.
Best of our ability.
Exactly. With that said, I would like to make a toast, if I may. I don't know what to toast about, but I have a tough time not toasting about this, because this was something that happened a year ago that really saddened me when I found out that this happened. And now my spirits have been lifted from this event, and it is that the Foo Fighters are going on a tour. I'm so happy to hear about that. I'm excited to see who the new drummer is.
Are they touring again?
Odds are they're not going to be as good as Taylor Hawkins.
Yeah.
Taylor Hawkins might not be the most fundamentally great drummer that you ever heard, but man, this guy played with an attitude. His death was a huge loss in the rock and roll industry, so I'm excited. I'm going to get tickets. I have so many concerts I have lined up this year. The Foo Fighters, Guns N' Roses, Metallica, Bruce Springsteen, Chili Peppers, Blink.
But this is it kind of feels like the last hurrah for a lot of these big bands. A lot of these I don't want to say older, but they are now.
I agree.
A lot of these guys that have been around for 3-4 decades.
Yeah, well, Ozzy announced his retirement, but he's also doing one more show. So it's we'll see. But
that's the thing is, I've seen Alice Cooper's touring, and I'm like, man, that he's been around since the 70s. So it's like, holy cow, this guy's been touring for 50 years.
Yeah, dude. So
how much longer can he tour?
Yeah, and I really think, not that I'm a musical industry expert, but Elton John announced his tour, and he was like, this is the last tour that I'm doing ever. Yeah, I think that's kind of what happened with Def Leppard, Motley Crue. They're just this is kind of it, Mick Mars.
Well, they're the ones touring with Alice Cooper.
Yeah, well, and Mick Mars has already announced his retirement, so it's this is it. So I want to make a toast to the Foo Fighters, man. I'm excited to see them. And I'm super excited. I love the Foo Fighters.
To the bands continuing and the bands that are
rock on,
gracefully bowing out. Rock on.
Exactly. Love your AC/DC shirt, by the way.
Yeah, I thought you would. I think that might just be a new one for the podcast. Just rock on.
Yeah, let's do it. When
in doubt with your whiskey, rock on.
Yeah.
All right. So if you raised a glass, I get to pour one out, and so I guess let's pour one out to. All right, weirdly enough, let's pour one out tax day and all the stress it causes.
Yeah.
I don't know. By the time you guys hear this, hopefully you will have mailed in your... Hopefully you will have at least filed your returns.
There we go.
To say you've got that in the mail. Hopefully you've also paid it, or if you haven't...
hopefully you filed an extension or something like that. I don't know.
If you haven't filed it, file your extension.
Yeah. Let's pour one out to those books. I mean, honestly...
Let's pour one out for those poor bastard tax accountants who have been going helter-skelter for the last 3 months.
Exactly. Cheers to tax season.
Cheers.
Excuse me, pour one out to tax season. My bad. I mean,
cheers.
I mean, I just filed my taxes today, which... you can always count on me to get things done at the very last minute and no other time.
Fashion.
Yeah, no other time. But I just filed my taxes, and I just found out that I'm poor enough to get a refund. So,
pros and cons.
Yeah, not bragging, just saying. But I feel like the thing about getting a refund, it's
either
cool,
that or they're withholding way too much.
Yeah, exactly. Yeah, so whatever it is, but getting a refund is cool. I'm getting another paycheck on top of my paycheck, but it's also whoa. I just loaned the IRS a ton of money interest-free.
Yeah, I just loaned Uncle Sam interest-free money.
I know.
That's some bullshit.
I know. So I'm gosh, but at the same time, it's kind of it's pros and cons in the sense that okay, well, if you're going to be irresponsible with your money anyways, you might as well just loan it to the IRS for interest-free.
To be fair, it's one of the most responsible ways to be irresponsible with your money.
Exactly.
You're not getting a return, but you're not out $6,000.
Right.
In March,
exactly. So, I mean, I don't know. I'm getting a nice enough return where I'm like, I already bought a new guitar, which I mean, that was just my bonus money. But like this return, I don't know. Maybe it'll finance some concert tickets.
Yeah, I was gonna say at this point you probably got one, maybe two more concerts. Great seats at concerts.
Dude, listen, your boy, and that's great. But like your boy does not sell himself short when it comes to concert tickets. Okay, like I get really nice seats. Like I don't ever like that. That to me is just so much worth. Like because if I'm the nosebleeds, I'm not really enjoying it. I'm just like whatever. I'm seeing it.
Yeah, like I can sit kind of far away from the band. I don't have to be like on the floor. I don't have to be in the snake pit or anything.
It depends.
I could be
yeah, but the energy is just so much better on the lower seats.
It's very different exponentially. I don't deny that. That's absolutely true.
So yeah, but happy tax day. I mean, it's literally tomorrow. Tomorrow is the 18th. Yeah. So today. Normally it's the 15th. But the 15th fell on a Saturday, so whenever it falls on the weekend or on a Friday, I think they always postpone it to the next Monday or something like that.
Next Tuesday. You usually get the next Tuesday.
Really? I feel like last year was on a Monday, but today was Patriots Day.
It was, and I think they. Yeah, as I say, today was a holiday, so
which not really, but kind of.
Yeah, but it's still, to me, it's one of those things where if the U.S. is going to go Election Day on the first Tuesday following the first Monday in October or in November every other year, every 2 years, whatever the fuck it is, it should probably be Tuesday so that you can spend all day Monday having people tell you taxes are due tomorrow. Not like you're at home on like you go to church or whatever on Sunday and then it's like
nobody
the next
cares.
day you get to work and like you get off work at 5 and they're like the post office will be closing at 8 p.m. Your taxes are due.
Yeah. You're
like, wait, what?
Oh yeah, that's right. Yeah.
I got a 45-minute drive home and I got a 45-minute drive to the post office. I have an hour to do my taxes.
Yeah.
To be fair is all you need.
Yeah, exactly. And by the time, this actually gets published, I will say, the IRA contribution deadline for last year, if you haven't done it already,
will have closed.
It will have closed. It was yesterday by the time this released. So I think this will be released on the 19th. Yeah. So contribution deadline was was on the 18th.
19th or 20th, yeah.
Yeah, and then today is the 17th. So like as we record, if you missed it, I'm sorry, but I did try to warn you last week.
Yeah, we gave you a heads up.
At least we tried to, but that was very much.
And what I'll say is this: I'll conflate two sayings. Nice. If you missed it if you had the means and you missed it, but you were trying to, that wasn't very drunkenomical of you. But if you got there in time because we got to you in time,
welcome to the club.
Keep it drunkenomical, guys.
Yeah, not pouring one out to you, that's for sure.
Absolutely not.
Yeah, but all
right, no, we had some weird promises we made last week too, though. We had two big things we wanted to talk about, and that we.
We teased a lot.
Let's get to just real quick. We teased two, and I feel like we should just rock those out of the park real quick, and then get on to all the chaos that really did come through that we weren't necessarily expecting.
Yeah.
And I'll just start with if we're out of taxes, and this is just the thing. So I was filing taxes. Weirdly enough, Aaron, I've been working on taxes in the last 24 hours as well.
I wouldn't believe
Not
it.
Mine.
I wouldn't believe it
in general.
With your accounting stature, I don't believe you.
I know, odd, right? What a silly goose. But. Boy, let me tell you, the penalty interest rate on missing your quarterly payments and or on just not having the wherewithal to pay all your taxes on time. Boy, have they gone through the roof.
So is that like a floating
compared to the year before?
Is that like a floating rate or something?
It must be because it changes. So the IRS actually changes it quarterly.
That kind of makes sense because I feel like floating rate bonds. I mean, the floating rate bonds change after the payment, right? So it's. Whatever the index rate is, right?
I think they do. But
so yeah.
But so the IRS changes per quarter. Now they usually announce 2 quarters in advance. So they'll say like this is the current quarter, this is next quarter. But like two periods away, or it's like if you're in period 0, they'll announce period 1. They'll tell you period 0, which you're in, is this. Period 1 is this. And period 2, which is those with a finance background or have taken a finance class, remember, always recognize that period like time 0 is now exactly where you're standing.
Yep.
But time 2, so essentially the beginning of a third period, is unknown and will be disclosed at a later date by the IRS. But right now the IRS is saying 7% is kind of where they're at on penalty and late rate.
Well, I think, and this is something that we're talking about a little bit off mic, but it was like, I think it has to be to what you said, off of that risk-free rate, right? It's like...
Well, absolutely. Because we know the risk-free rate is 4.75 to 5 right now.
Exactly.
And so you can't have a...
More on that, but yeah.
I was going to say, you can't have the penalty rate for interest to be less than,
less
than you get for investing in a government bond.
Oh my God, yeah, Lord forbid, the real interest rate there is negative.
If you told me the penalty rate was 3% and I could get 4.5% on a bond, I'm not paying until the IRS guys are at the door. Like, all right, guys, I've got your money. You'll accept a bond, right? I probably wouldn't do that. I'd probably actually be scared shitless if the IRS actually showed up in blazers at my door. I'd be like,
touche, man. Touche. Yeah.
That's not fair. I definitely filed the correct numbers.
Well, because like last year, you told me this last year, so if you missed the quarterly payment, and this is more applicable to like small business, right? So like if you
small business, so LLCs, small businesses. So when you it's a fun thing in U.S. taxes, and it's called there. So when you're an employee, so W-2 wage employee, you have your withholding every 2 weeks on your pay period. It's the payroll contract's job to withhold a correct amount based on what you say you need for withholding, blah 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 blah. And then generally speaking, if you do it right, you will owe no money or you will get a return, unless you're really conscious of your money and conscientious about it. In which case, you can actually elect zero withholding, take your money, invest it, earn a return, and at the end of the year be like, oh, I could have given the IRS the tax-free or the interest-free loan that Aaron was talking about, or I could take that money, earn money with it, sell out, pay my taxes. Creates different tax implications. Fun fact: the IRS always gets their pound.
Well, it depends. It depends because if you bought like a 9-month interest, or not a 9-month interest.
If what I did is I went into munis and there's no tax.
That's what I was gonna say. Like a 9-month term muni bond, right? No tax implications there. Fun fact, in case you guys
that's the fun thing. So for those of you that are wondering, a muni is a municipal bond. A municipal bond is just from a smaller municipality. Could be a city, could be a county, could be a town. Those have zero federal and state tax implication for you or state tax implication for you because they're trying to encourage you to invest your money into these smaller districts.
And also, fun fact, also not financial advice, but just in case you guys were wondering, right? Because we talked about the inverted yield curve for a while. The yield curve for muni bonds, not inverted. Just an FYI. Right?
No, why would they be? But
right, exactly.
They don't have amazing payouts, but at the same time, they're tax free and they're relatively low risk. So it's
yeah. So, I feel like it's worth bringing it up. I don't know, whatever. We'll see.
Yeah, no, just what I was noticing was a very strong increase in the in the penalty rate of interest being levied against you if you miss those quarterly. So I guess I didn't finish the whole thing on quarterly payments. Quarterly payments is this fun thing you get to do when you run a small business. That the IRS goes based on what you currently earned, you get to estimate based on the previous quarter's business, how much you'll owe in taxes. And
so stupid.
And you get to pay that on, and it's very funny because you pay it on, I think it's April 15th, June 15th, September 15th. Another reason to hate September. Or if y'all remember us about a year ago talking about why so much money was coming out of or so much cash was sliding out of markets in the middle of September, and we said, it's because tax bills were due.
Right.
It's the quarterly payments. So everyone from the biggest company in the world to your friend down the block with Lawnmower Repair LLC, all have to, as long as they're earning like a reasonable amount of money. I think I forget the exact floor amount, but it's actually a pretty insubstantial amount if you're actually running a business.
Well, I remember
you have to pay quarterly payments.
Yeah, well, I remember you were saying that, and I was like, okay, tax season, September. And I was thinking, okay, well, I know a lot of like IRA, like retirement account tax deadlines.
I know at one point you asked me, because I don't remember if we made the podcast, but you asked me at one point, you're like, is it because October 15th is like when the extensions are done?
Yeah, so like a lot of extensions,
sort of, but
a lot of extensions are all the way until they go out to October, and then on top of that, like a lot of like IRA stuff, like so with your retirement accounts, you have until October 15th or I forget what date it is, but like you have until October to amend whatever tax discrepancies that you might have committed earlier in the year with your IRA due whether it's a recharacterization or a late contribution or whatever it is. There could be tax consequences.
Data not being exactly settled because I made a bunch of buys at this price. But,
or you rolled it over
the stock, but the actual price hasn't settled yet because
exactly. Or you rolled over your 401k into your IRA and apparently there was some, or like into your Roth or IRA, I should say, and there was some tax implication there. And all of a sudden, all right, well now I have to sell some shares of this to pay $2,000
make good on a hole that I missed.
Right. Yeah. So I thought it was that, but
No, I think I'll be fair. Looking back at it, I think it was just quarterly payments from these firms. And
fair enough. Yeah.
I even looked further. So because I'm in Nebraska, I was looking at Nebraska's, and for missed or underpaid quarterly payments in 2022. So like, obviously it's 2023 now. We're paying taxes on fiscal year 2022.
Oh yeah, this is funny how this works, but yeah, go on.
So in 2022, if you were late, the tax rate was 3%, right? So if you missed or you underpaid because maybe you just had a banging quarter, or you had or you worked for 6 months and you used that as your assumption and you like didn't work all that hard, or you did but you like didn't have all that much business. You assumed that was the basis for a model that you expected to grow very reasonably. And then in 2020, or you're using 2021's numbers, and then 2022 is just wildly more business, and you never stop to go, I should probably kick some contributions up a notch. You just used old numbers. And to be fair, you can actually get a fair amount of forgiveness for that if you were just to say like, look, this is why
I was not expecting this.
I underdid. I don't think I should have to pay a penalty for having a plan in place and then it just didn't occur to me.
Yeah, the amount of tourism to, Kennebunk, Maine. Oh my gosh, I wasn't expecting that, right? Yeah.
Yeah, or whatever, like if you're in Lincoln, like Nebraska won 6 football games. It's like, think of the business. But this year it's 5%. It's 5% right now in Nebraska. If you're late on quarterly payments, it's.
But what did they say next year was going to be? What was the projected rate for next year?
I think it's good. Well, they haven't. Nebraska hasn't projected for what they're going to be doing next year. I have to imagine it's connected to what the Fed does. But my guess is, and it's looking like this, is that Nebraska is actually the penalty for 2020 for the year 2021, or for late payments in 2022 was actually lower than the risk-free rate. It was lower than the 3.5% that we had for a lot of that year. And that actually kind of surprised me because I was like,
at that point, it's almost like
it's almost
a bargain.
It seems like someone fell asleep at the wheel.
It's funny you should say that.
Yeah.
I think that's fascinating because I mean, tax season, I feel like has kind of been a burden on everybody. And then, I think this year, especially when a lot of people saw the tax bill, it was like, what? You got to be kidding me. What is this?
Well,
so I think that explains a lot of it. And next year, it's kind of like, all right, brace yourselves.
Oh, yeah. It's good. Next year is going to be bad.
And
not bad. It's going to be hard.
Yeah.
If you're on the wrong side of it.
Yeah. Just to clear the air, like, is this any fault of any administration? Is it a Trump thing or is it a Biden thing? Is it as to why this is happening? Just because I don't want anybody to diffuse blame wrongfully.
No, that's not. Fine, both administrations, neither administration. If you blame one, you have to blame the other. If you blame, you know what? Fine, the administration that's at fault.
Is this the IRS?
The administration at fault is the Powell administration, and I don't. And to be fair, I still think he's doing better than anyone else could. So,
well, okay,
and Warren agrees.
Well, yeah, exactly. So, I can remember. I don't know if I shared it with you or with whomever. I shared it somewhere, whether it's
with
on Twitter.
Me, and I think with the general chat too.
I feel like I put it on Warren Twitter Buffett too, but like. Warren Buffett literally said Jerome Powell is doing an excellent job. And he's
doing a great job.
And literally on an island on this. Like I have said, Jerome Powell has done, for what the cards he's been dealt, has done an excellent job from the talking heads in the room that he's in. I think dealing with all those people and not to mention the pressures that he's facing. I don't necessarily think he wanted to wait this long to raise interest rates. I think it was really just like a...
No, he's a hawk. I think he's angry about some of this. I think he's like very angry about some of the things that haven't come to fruition that he would normally want.
Yeah, and I'll be honest with you. I feel like a lot of this was like maybe some sort of political witch hunt to like really sabotage his reputation as a Fed chairman. Maybe I don't know, and I don't know who the origin of that is. I have no idea. But
I look at it. If we're going to blame an administration for interest rates being where they are, then we have to blame Powell's administration because that's actually that's under his purview.
Exactly.
It is his job.
So, yeah. I mean, it kind of sucks because it's like okay.
To be fair, I think Aaron and I, you and I would both agree that we're blaming him for them only being 5%, not for the fact that they are 5%.
Well, yeah. Well, I mean, let's also
take a little low, JP.
Yeah, I mean, let's also take a look at what happened this last week too. So we had an inflation reading.
Absolutely.
CPI came in. I know we want to talk about zombies for a little bit, but CPI came in on Wednesday? A very promising reading.
Yeah, very mild. Eggs were down. Oh my God, Erica got eggs on sale the other day. We got 36 eggs for $6, I think.
Well, if it helps, if it's any indication as to how CPI looked, I've been regaining weight.
I was going to say, you look like you've bulked up. I don't know if it could be that you got a haircut, so the hair's smaller.
I didn't get a haircut.
Now that you're telling me, hair's the same size, shoulders are just bigger. I get it.
Exactly. Thank you. I've also had a shoulder injury too, so I don't know if that's anything good. But so the bulking, I don't know.
So you're not necessarily swole. You might just be swollen.
Maybe, dude. Maybe I don't know. I haven't stepped on a scale recently funny because I'm kind of scared, but and I haven't been boxing as much. I've just been like weightlifting, but
tough.
Whatever. Anyways, yeah, so CPI came in at 5%, and a lot of people are going like, in our Discord chats have been saying like, how did this happen? Why did this happen? Is the real interest rate zero now? Is it negative? Is it positive now? Like,
it's not. It's close, but not quite zero.
Yeah,
remember because 475.25.
Yeah, and inflation is at 5, but it's year over year, so it's not. Like, let's just say, like, forget everything that's happened. Like, let's say we didn't know what inflation came in at last year, 12 months ago. Let's say we had no idea what it came in at. If you just look at it month to month, it's still going up. The real interest rate is still positive, or still negative, excuse me.
Well, they do want inflation you want positive inflation. Negative inflation is deflation. That is bad.
Yeah,
it is
economically,
it is better than rampant inflation.
It is.
But you want positive inflation, but you want controlled inflation.
Yeah.
For those of you that don't know, I think last week we spent a little bit of time talking about Muhammad Al-Arian and saying, very intelligent economist.
We did a toast
usually
to him not so
pretty
long
close
ago,
to on the money.
Oh, absolutely,
and I know towards the end of last week's episode, I said something along the lines of, the Fed has been gunning for an average 2% or 2.5% inflation is what they're gunning for. And the only reason I don't know that off the top of my head is because I think it's a stupid number. I think it's an unbelievably stupid number. It's too low. Right. For lack of a better term, it's what got us into this trouble in the first place, was having inflation so low.
Yeah.
And I think what I said is I think we're going to have to deal with at least a 4% inflation, or have to get used to a 4+% inflation was kind of my position. And I'll be honest, it's a position that it's not necessarily just mine alone. It hasn't been a very recent conversation, but from the as yet unaired secret episode that's actually of such low quality that we can't ever air it, but we will redo it soon. When my stepdad was on, we talked about how kind of the history of the United States, inflation's been about 7%. Is the historical average inflation in the US. And so 2% is wild. 4% to me it makes a little more sense. It's like, okay, it's not what you necessarily want, but it's realistic with the other things you want more.
Well, I mean, I forget what it was, but like I remember like when I took like economics or finance or whatever it was, there was some sort of statistic that I was talking about like what is a sign of a good economy? What kind of inflation rate predicts a good economy? And I think the textbook settled around 3%. I'm not sure.
Yeah,
I think it did.
And that's what's always been funny to me is that kind of this idea that the U.S. has inflation that's lower than that. And I'm like, well, we said this all of 2020, two-thirds, maybe all of 2021. Fine, the U.S. has inflation around between 2 and 3% on our currency. Why is that? Well, it's because all of it's getting pissed into the stock market. We have out of control inflation. Now there it's called growth, and it's
apparently,
good.
Allegedly,
Sorry, I just hit my mic. There it's good.
Got so mad.
With quotation fingers. It's it's one of those things where I'm like, growth is good. Uncontrolled growth is cancer.
Yeah.
And so the U.S., the problem in the U.S., in my opinion, has been that they allowed uncontrolled growth of the stock market, which we would ostensibly say is a good thing, except when you don't allow for downside.
Right.
And then you have this problem of, the market's down 10%. How's the Fed going to react to that? And my response is, has it affected unemployment or inflation? And if the answer is no, the Fed shouldn't react to it. The Fed should go,
whatever. Yeah.
Correction. Sounds like a correction to me.
At that point, it's not within their purview. Like if it doesn't affect unemployment or inflation, then it's like, okay, well, why react to that?
Yeah. Why are you asking me to react to that? It hasn't affected my issues yet.
Yeah. And I think to an extent, think that the Fed should look at the things that do affect inflation and unemployment and go, okay, well, how do we stop this from affecting unemployment? But I don't think they should really get their hands too involved. I don't think it's their, like we said last week, I don't think it's their job to try and solve every single issue at hand.
No,
and
absolutely not.
To be honest with you, like when I saw the CPI report coming at 5%, I was like, man, I think this is really just a testament to, Fed policy, monetary policy. As we know, it takes about a year to really set in, to really start affecting things.
Well, yeah, monetary policy can be very fast. Monetary policy is faster than fiscal policy by a long shot.
Certainly a lot faster than fiscal policy.
But usually that reaction is the market going, oh, okay, someone's awake at the wheel.
Right. So like my reaction to the CPI report was, okay, now do we think that terminal inflation will still be at 4%? Because I know we talked about that. And I was like, oh man, like, the CPI report we both thought that it was going to come in way higher than 5%. So we were wrong on that.
No, I absolutely didn't. I was trying to think did we have a bet?
Yeah, and I was like, exactly. I was like,
oh, guys, and if we had a bet and we don't remember it,
please
go ahead and
please hold us accountable.
Tell us. We'll make good on it.
Because I know we had some. I know we had some bets on CPI before. We had a 69 bet at one point. But whatever. I know we did.
Usually we're good about remembering bets. But I'll be honest. The last few weeks have been.
I drank a lot
fun,
last week, so it's been fun. It's been fun. The next morning, not so much. But so I remember seeing that and I was like, man, if it came out at 5% this month, next month. With a sustained...
Even with just a 0.25%. Even with a 25 basis point raise, which I still think is justified.
Yeah, but by next month, if they did raise by 25 basis points in early May, that won't really affect CPI print in April. So
no. But I mean is if they bring it and the CPI stays down at 5, well then guys, we are at a positive or a non-negative real rate.
And to be honest with you, a really good question was posed in our Discord, and it was okay. So now that the Fed, now that we're at a semi-real real interest rate, does the Fed decide that they want to stop now? I'm really paraphrasing Canelo, so don't sue me.
Yeah. It was also, do we still think we're on track for a soft landing? And, at this point, I still think it looks like a belly flop. I still think it feels like a belly flop.
I don't know if that's going to be a belly flop, but I think it might just be a tough landing, but shallow, but lasts a long time. The pain stings.
Yeah. Well, I was going to say it's more of
shoulder pain for a little bit.
Yeah. Well, there's a belly flop that hits so hard that the person throws up in the water, is just dying.
Oh, yeah.
Yeah. I don't necessarily think we're on track for that anymore. I think this is going to be more of one of those where you hit the water hard and you hit the water hard, but you have to wait that fraction of a moment to go did that just sound really bad? Or am I actually also hurt?
Yeah, but I'll be honest with you. So when I saw this report, I was like, man, I agreed with what you said last week when you said, I think we're just going to have to get used to seeing, a 4% inflation rate for the next 5 years at least. And I was like, man, after the CPI print, I'm like, man, I think we might be seeing a 4% CPI rate next month, or maybe later this year. And to your defense, I think, okay, we might see a 4%.
I think we might.
Yeah, well,
it's possible.
Well, to your defense, I think we're going to maybe see a CPI print of 4% sometime this year. But even if we did, I still think that 4%, I think it's going to hit some major resistance. I think it's going to really be really tough for CPI to come in below 4% and sustained below 4% permanently, right?
Oh, absolutely.
It's going to take a while.
It's going to take a demonstrable change in a lot of what's happening in the global economy. We are seeing, I guess, slightly good news on that front out of China, if you believe their numbers. And like I said,
I have a tough, I'll just say this. I don't want to say I believe or don't believe their numbers, but I have a really tough time wrapping my mind around those numbers. That's all I'll say.
Let's put it this way. I feel like a horse sometimes. Get me the salt lick when I have to read the Chinese numbers. I'm like, I believe that aspects of this are true. I'm not entirely convinced. I think the final,
Well, the other thing too is on top of CPI, we did have a lot of economic data coming out in the last, let's just call it 6 days. So CPI came out. Chinese GDP still, I don't know enough about it to comment on it because I'm just this doesn't make sense to me. But the other thing that came out too, which we talked about last week that we teased a lot, was retail sales. Retail sales came in down by 1%, right? So that's very morbid reading if you want to look, in terms of economic health goes, which I'm it's morbid reading, but it also explains why CPI is at 5% instead of...
It explains some of that CPI cooling. It absolutely does. Yeah. It's that people, it's hard to have prices going up, people willing to pay more for product if people aren't buying more product, right? So
exactly.
I think to be fair, you're starting to see people run out of money. That's what you're starting to see on the retail front. Also, another thing is people might have bought everything they need to buy.
Yeah.
That isn't food, because obviously you need that on a relatively
discretionaries, right?
Basis.
Discretionaries are okay, let's buy it now before our buying power gets lower, right?
Yeah.
Because I really do think, and I don't want to speculate, but I do think that there is going to be a currency war, or at least some sort of effort of a currency war that's going to be unleashed on the US dollar. I'm really convicted on that.
No, I think the yuan's making but it's not just the yuan's making a full court press, and BRICS is hell. Well, BRICS is helping, is coming on board, and that gives them an economic zone that's a little more. Yeah, it'll be yuan dominated, and we know it will.
Yeah, and we know that. Like, I don't think that the new, like, and we talked about the new Brazilian president. Like, I don't necessarily think, and not that the old one was much better.
The old one was demonstrably worse for democracy, except that when he lost the election, he accepted that.
Yeah, but the current guy, the guy that just got elected, that guy seems to be very much in the cahoots with China. I mean, I think he's really taken in this like whole BRICS agreement.
Well, Brazil is the BR of BRICS.
No, there's just the B. R is Russia. So
Russia. Here's what I'm going to say this, and I'll say this unapologetically. I agree. If Russia ever thought the West was its threat, it was absolutely wrong.
It's very much internal.
The real threat to Russia is this, and what it's boiled down to it. And I've read a few opinion pieces that kind of say the same thing, and it's. And I think we've discussed it, is that at some point, in order for Russia to pay for Chinese assistance in this war or its defense, whatever it is, it's gonna have to just give away land. It's gonna have to give away land, mineral rights, something to China. Yeah, it's already pumping them very inexpensive nat gas, but that's because it can't sell nat gas anywhere else. It can't sell at the Western price anywhere because the West isn't buying. Yeah. And you don't think China going, well, we'll give you bullets to fight this war with the people next door to you that you're losing, but only if you give us mineral exploitation rights to these areas that are notoriously rich in mineral rights. And you don't see that as a threat. You don't see your nearest land neighbor, like your nearest big land neighbor, who actually has a lot of their population and military power on your border. You've also fought a war with them in the 50s. Yeah. And you think having to buy munitions from them just to continue to be operational in a war of choice against a neighbor a third your size. If you don't think that guy who is desperate for resources at all times to have access to them, control to them, will have a coup in Guinea for them. Throwback.
Jeez. Throwback.
If you're not going to sit here and look at that and be like, well, gee, my biggest threat is a contiguous neighbor, not this anomalous idea of democracy. You'd think economically you'd understand that the biggest threat is an autocrat nearby with the means to take over. And the West doesn't have an autocrat nearby, period. With the means to take over, fine. With the willingness to take over, no. Yep. But down Beijing way, there is an autocrat with the means and the willingness to take over. And
but I mean, all of that is starting to get really worn thin.
Well, the best part for Beijing is they don't even have to use their military. They can wait till Russia's desperate enough, and they can just be like, well, cede me all the economic rights of this area, this territory. And Russia will do it.
I just feel like, okay, I mean, so this is the thing about the whole BRICS currency war that I think that they're playing on to the U.S. is I don't think necessarily Brazil is a well-managed country, but if you stack Brazil up against Russia and China,
South Africa, and India all have that same problem that we talked about, which is to say they have a huge disparity in wealth, and they have an extremely extremely
income inequality
under-economically
is so much worse there than anywhere.
Poor populations.
But if I think so, like Brazil, I think is going through their political turmoil, but I think their problem, like Brazil, India, and South Africa, I don't necessarily think that their problems are necessarily internal. I mean, it's not internal, but like if you stack it up against China and Russia, their problems are internal, right? Like nobody in Russia likes being in Russia, just based on certain statistics.
Not nobody, but
not nobody, but like I'm just saying, like if you look at like just the if you look at health numbers, right, mental health, physical health, all that kind of stuff.
Oh well, let's put it this way: people would rather die than have children in Russia at a replacement rate. Yeah. Russia has a declining population.
Yeah, and then if you look at China...
to be fair, so does China.
China's got some serious issues too, because, I mean, first of all, they have more men than women.
Yep. And I don't know if you guys know this, but the easiest way to describe this is a woman is capable of having a single child in a given 12-month period, really. Mm-hmm. Healthy.
Exactly. Yeah. So, I mean, not that that's what women are for, but like, in terms
boiling it down to a simple statement of economic mathematical replacement.
Yeah, exactly. Replacing, some guy that's leaving the workforce with someone that's coming into the workforce, just from that perspective.
Or if you're Russian at 43, just leaving the world because of vodka.
Exactly. So if you look at China and Russia, like, if there was a time, I feel like, for them to put on a currency war against the U.S., this is it. I don't necessarily think it's going to go very well for them, but I think maybe. I mean, I don't know. Sometimes you just kind of want to go down swinging.
Oh yeah, no, it's there's. I've been re-listening to a very interesting podcast.
You've been cheating on us.
I love.
I'm scared.
Yeah, it's okay. It's actually, to be fair, I listen because part of it makes me think it makes me a better podcaster to listen and just be like, oh, this is actually. But it's Dan Carlin. I don't know. Are you familiar with Dan Carlin?
Well, if it's any
hardcore history.
I don't, but if it's any consolation, I listen to zero podcasts.
That's fair.
I don't even listen to our
but Dan Carlin, his are much longer, much more in depth. Their history podcasts, which obviously tickle my fancy. Yeah. He has it's something like a 20-hour 6-episode podcast on the First World War. And even then, you listen to it and you're like, man, this is long, this is detailed, this is in depth. But you're like, man, it's just a skim. It's an overcoat. It's basically a semester of college at that point. And it's a good lecture. And it's good points. And at one point, and towards the end, you get to this point where in the First World War, Germany can't win the war anymore. They know they can't win the war anymore. They no longer have offensive capability. Haven't lost yet, but they can't win. Yeah. I think at this point we can say that Russia's military offensive capability is exhausted. Mm-hmm. But at the same time, if you look at the eastern part of Ukraine, large amounts of raw material iron, raw material bauxite, aluminum, materials that if you were to take them to a foundry and have large quantities of free, easy electricity, you could turn raw materials into alloy minerals that have a very good return on the open market, right? So that's what Russia's interest in Ukraine is. They want the raw materials. Because what they saw was Ukraine getting closer to Europe and the rest of the West, and they concluded that meant that Ukraine was going to stop selling the raw materials to Russia, who would use their excess electrical capacity to produce these then high-value materials. Uh-huh. So Russia's got that problem. Now at the same time, they export food. China's problem is that they're not the cheapest labor manufacturer on the block anymore.
Yeah, that's a huge problem.
They also have a problem of a declining population, a de-urbanizing population, which is actually a fun fact. So that's to say small towns are growing, which means that people are leaving cities. They don't want to live in cities and manufacture anymore. Absolutely. And so that's China's problem. Now, China is offensively not spent at all. They haven't, to be fair, China hasn't really had a go in offensive warfare. Or even in offensive economic warfare. Yeah. Russia's still not fully spent economically in warfare. They could destroy the dollar on a day if they decided to dump U.S. securities on the market.
Yeah, but having said that would be just as detrimental for them. So it's not like it
does more harm at home than good, because it's like, okay, good. I'm going to wipe out what's under their feet. It's like, what are you going to do to ours? It's like, well, you know how the floor is lava? Yeah.
Yeah. Well.
Yes. Yeah. And it's erupting. India, South Africa, Brazil. Their currencies, I think, have a lot more upward potential. Mm-hmm. You bring more of the population on board in economic output, you got more potential. I think that if the three of them were to cast off the R and the C, they actually have a really interesting and powerful ability to become a really interesting, almost purely Southern Hemisphere, not because of India, but a really strong Southern Hemisphere trading bloc.
Well, and this is the thing is I'm not against the BRICS agreement or the BRICS alliance as a whole, right? Like
I'd be fine with it if Brazil, India, and South Africa were steering.
Yeah, exactly. I just think the whole Russia and China thing in terms of the currency war, it scares me because I think they're really getting the EU to go on board, and Saudi Arabia and all these other really powerful global entities to come on board and go look, we don't want to buy oil with not our own currency. And we're tired of having this appetite for the dollar because it's not our currency. Why do we need a bunch of dollars?
And the only thing I'll say, and kind of just a really fast on this one, to try and use the analogy is, let's think of the petrodollar as Blockbuster.
I don't want to.
I know.
You do but you are. I think actually, on the way to make an excellent point.
No. So if we're really going to play this game, let's do it this way. Let's think of Blockbuster as the Petro Pound, because that's who the original first big buyer and big player in the oil game was.
Let's call him MySpace. Let's call him MySpace. The Petro Pound is MySpace.
It works better. It works better in the streaming sphere. I promise.
Okay. All right.
And the only reason I say that this way is because there is a reason that the British invaded Iran. It was to secure oil because the Royal Navy was converting to oil from coal, and they realized our military and therefore our economic viability is predicated on the Royal Navy. Thus, oil, we must secure oil supplies. That's why we did that. So let's think of Blockbuster as the British Empire, the Petro Pound. the US dollar, then Netflix. Next one to the game.
That makes
first one to modernize. Huge streamer. Everyone was on board at first. I mean, utterly changed the industry. Drove the petro pound right out of business.
Instantly.
Not instantly.
I mean, pretty rapidly.
In the end, let's think of the petro yuan as Hulu. Hulu is owned by Disney. For those of you that don't know, so it's Disney ESPN. It's actually a pretty solid block.
It is.
But at the same time as you have Hulu coming out, you have ABC leaving. Oh, not ABC. But one group left it, and it didn't. It doesn't do everything that Netflix does. And so then you have Amazon Prime and Paramount Plus, and now everyone's coming to the market.
And all that kind of stuff.
Apple TV, absolutely. So it's this whole everyone's now streaming. And in the end, what is everyone's abandoning cable, right? So I guess we could have said the petro pound was cable, not necessarily Blockbuster. But so everyone abandons.
Close enough, yeah. But
everyone abandons that first one for the new ones. But then at what point is it just so ineffective to do business in all these that you maybe just don't go back to Netflix and then pirate the other things or that. And so for me, like okay, fine. Let's just say the world does decide to do business entirely in petro, whatever your local currency is. All that does is make it more difficult, or gold.
Yeah.
Which again, all gold then is you're replacing the US dollar and the full faith and credit of the United States, which, to be fair, you'll hear me be bullish on today. But let's talk in June, July, despite McCarthy's promise that they have a budget proposal.
Well, at one point it was very much, okay, how different is gold than the US dollar? But now it's a completely different subject, right? Now gold is not even close to the same subject as the US dollar.
No.
You know,
well, I mean, to be fair, like
I don't say there's no correlation, but I do think, in terms of, I mean, there is no correlation because if you think about it, like
no, there's correlation. I can use dollars to buy gold and gold to buy dollars.
I know there correlation, but if you think about it, there's like an almost inverse correlation because if the dollar weakens, gold makes a strong case. Yeah. Right. So
I mean, it's kind of it's one of the same ways where you could be like, well, there's a correlation between dollars and bananas.
Yeah. Exactly. Well, I mean, I think anything inflation hedging, which, like, if you think about it, commodities very much.
Okay, so let's do dollars and whiskey.
There we go.
Times are good.
There we go. See,
when times are good, whiskey goes up. When times are bad, certain whiskeys go up.
Listen, my friend, I would not be against a petro. Actually, I would be against this. A petro whiskey. No, I can't.
No, don't. I don't want to buy oil for whiskey. No,
I can't support that. I can't support that at all.
A drunk. You know what? I'm going to change it. Let's go with this. Let's go with a Drunkedollar.
A drunk coin.
All right, ladies and gentlemen.
That's what it is.
Those of you who have seen the drunk coin logo, that is no longer the drunk coin. It's now the Drunkedollar.
It's the Drunkedollar.
And it is
the drunken petro dollar. It's petro Drunkedollar.
No, petro's oil, so it's the
whatever it is.
We'll figure it out.
Like whatever you need it for.
We're workshopping it.
But yeah, I mean, I think there are a lot of things to look at, right? So there's how is this currency war going to actually take off, right? Because I don't necessarily think it's actually going to be that threatening to the US dollar.
No. Well, it'll be. I think it's gonna. The funny thing is, I think it's gonna be kind of like a bankruptcy, except not as damaging. It's gonna start. It's gonna be.
Well, I think really.
They ask like really wealthy people, how'd you go bankrupt? It's like a little bit at a time, and then all at once. I think the war will start, or the currency issues will start a little bit. Yeah, all over the place, and then suddenly it'll pop right off.
Well, I mean, normally speaking, if if you're one business owner, if you're a big business that owns a bunch of little businesses, and you file for bankruptcy, a lot of it's just like I need to restructure my debt, figure out how to organize it, and how to pay it off, right?
And if you guys need more insight into bankruptcies in 2020, we actually have a bankruptcy episode. Yeah, where we discuss bankruptcy restructuring versus bankruptcy liquidation versus bankruptcy for farmers, which. I was actually wrong on that prediction, and I'm glad I was. To be fair, I'm glad I was for the reasons I am.
Yeah, but to be fair, like, if you had to restructure your debt, not the worst thing in the world, right? It's not the worst thing in the world, but like there are people that need to file for bankruptcy because they just can't operate as a business anymore.
It's a viable business, but it has made too many bad choices, too much adverse climate. It needs to restructure the debt, but it's still operationally viable.
Exactly. Yeah, and I think the currency war, I think, if you think of it as like the whole bankruptcy proceedings, it's like, okay, there's restructuring, and then of course there's the ultimate, hammer to the nail into the coffin, right? And I think if the BRICS alliance somehow gets a lot of Western countries on board, then the war in the dollar, I should say, becomes a much bigger issue. It becomes a much more severe issue. But to be honest with you, there's still a lot of bricks that have to tumble. I don't think I don't think China has very much momentum behind them. Brazil's.
I think they do about Taiwan.
Right.
Okay. No, I won't. I'll hold some of my more tinfoil hat moments for next week in terms of longer conversation.
Yeah.
But for the second time in a 12-month period, we've seen the attempted. Last time we saw a successful assassination of a former prime minister in Shinzo Abe.
Oh yeah.
And guys, I did see the interest in the episode on Abenomics, and we absolutely will do it this September. But we saw an attempted assassination of another Japanese, of actually the sitting Japanese prime minister, and perfectly fine. Didn't have the same kind of jitters in the Asian markets I was expecting to have. But I'll say this, is it would not shock me to find out that between the two of them, there may have been some sort of Chinese push or radicalization or experience like that. And the other thing is because a destabilized Japan is a good thing for China. China, if Beijing, China, because great argument is which China is China? Is it the Republic of China or the People's Republic of China? And the argument of that is which side of the Taiwan Strait you're on. But I think that Xi Jinping is learning a lot of very valuable lessons, perhaps even painful lessons to himself from Russia's invasion of Ukraine.
Yeah.
I think at the same time it would not play out exactly the same because it would have to play out very differently. It's an amphibious invasion, but at the same time, I think Beijing is absolutely capable of swatting a lot of Taiwan's Air Force out of the air, and
but they would have to do that now. Like they would have to,
they would,
and I'm not encouring them to do it.
Absolutely not. I absolutely I demonstrably do not want them to do so.
Me too. But I'm just saying, if there was a time, it's now, because if they wait 10 years, I mean that's like they're missing out. Like
the longer Beijing waits, the harder it gets, because
to be honest with you, I hope that happens. I really do. But
absolutely.
But from their perspective,
I don't want to see a war fought in the Malacca Straits. I don't want to see a war fought down by Singapore. A naval war fought down there. I don't want to see a war that brings the digital world to its knees.
Yeah.
And that's what would happen. I think very clearly.
Yeah.
If there were to be a problem with Taiwan, because think about it this way: what did we conclude? 70% of global semiconductor supply comes out of Taiwan.
Yeah.
Not just out of Taiwan, semiconductors out of Taiwan, off that island.
Yeah, I mean, it's the semiconductor capital of the world. But I think, there are a lot of things we have to pay attention to. I mean, it's so weird, like how much of, the more you pay attention to global economics, the more you realize there's like a really big thing and there's a bunch of small things. Yeah, but essentially what you realize is the entire global economy is pending. We'll see what happens.
That's about right.
Yeah, it's like, we'll see what happens.
For the bartenders out there who are listening, it's you got 30 people at the bar and you got 6 orders pending and a group of 5 just walked in. Right.
Yeah, so it's like, they're going to have to wait. But I think, in terms, just bringing back to US soil, like one of the things that we're going to have to really keep a close eye on, and I wanted to talk about it this week, but I guess it would have been premature, but I'll tease it again, right? So
yeah, we're to push
we're teasing a lot of things. I know we've been teasing some. We teased stuff last week that we didn't talk that much about in terms of zombie companies go. But another thing that I wanted to tease was earnings season. This is a huge earnings season, because if you look at earnings forecasts in the last quarter, I mean, it's not like earnings forecast came in, but earnings growth was negative. Let's just say that, right? Earnings growth was negative. So if we have negative earnings growth again, a year ago we had a negative GDP growth in two consecutive quarters. So
that was recession.
That suggests a recession. But we also have potentially, if we look at earnings growth this quarter, we had negative earnings growth last quarter in Q4 of 2022. So if we have negative earnings growth in Q1 of 2023, that's going to be 2 consecutive quarters of negative earnings growth. So now we're going to have an earnings recession, right?
Yeah.
So
negative earnings growth doesn't mean negative earnings. It just means the growth is not. It's not growing. But the growth is going down.
Technically, it's an earnings recession, right? So it's a little premature because literally this week is the kickoff of I think I forget which banks reported last week at the end of the week, and now
a few.
It's a few, but now and we all know anytime there's an earnings season coming out, it always starts off with financials. Financials kicked off last week. I think it was about maybe 30% of financial or companies within the financial sector reported last week. So,
yeah.
But yeah, I mean, all I'm saying is like, this is a very fascinating earnings season because I think if we do see 2 consecutive quarters of negative earnings growth, I think you put some pressure on the NBER and they might be a little bit closer to declaring a recession.
Maybe.
Like I said, it's pending.
Last year was the weirdest non-recession we've ever had. Maybe this year will be the weirdest non-recession we've ever had.
You know what? Like I think jobs number the next 2 months are going to be huge. A lot of this is pending, like I said, right? We need to see a lot more data, right? So jobs numbers, like they need to come in and they need to be either catastrophic or they need to be I don't know, they need to be catastrophic or great, because if they're just okay, it's like, okay, now we got to keep waiting to figure out what's going on.
I'm gonna tease something that first off, I swear next week we actually will give you some zombie company lowdown on kind of how high interest rates are going to affect them, because this way, zombie companies are demonstrably bad if you listen to our old Halloween episode about it. And the demise of zombie companies, right? The Ash killing Evil Dead, the shawning of the dead. Yeah. The shawning of the dead will actually. The funny thing is when you let them fail, it actually frees up huge amounts of capital to then go into growth opportunities as opposed to just like keeping alive opportunities. But there is actually a really fun thing I kind of want to talk about next week, and I want to float this at Aaron really fast. And it's just, I think we should talk about farm payrolls, just farm payrolls, not non-farm, but like, and how that's affected our food inflation. Because I've seen some disturbing numbers, and actually it explains a lot.
I'm open to hearing those. Let's just say this: your reactions to those disturbing numbers. So let's do that. Let's talk about that next week.
Yeah, but, I think we should. But having said that, like, I'm just gonna throw this out and tell me what you think. Okay. I haven't done the math yet. I don't think we're in negative revenue growth. I think we're actually in revenue growth still. So we are not currently facing a revenue recession here at Drunkenomics. But if you guys want to help make sure that's true, if you want to help, if I'm wrong, stave off that horrifying alternative that there is a recession here at Drunkenomics, a hangover, if you will.
Oh my gosh.
More importantly, if you won't. You should check us out at drunkenomics.myspreadshop.com and there you buy some swag, let everyone know. We saw some pretty sweet stuff in the NFA chat down. So that's what I call the non-financial advice channel of the chat in the Discord. I'm just going to say it. Todd was at like a fucking fiend.
Oh, yeah.
With that setup. Looks great. Stay awesome, Todd. That's all I could say on that one. Between the shirt, the coffee mug, and the rig, he was. No,
seriously,
he was good to go trade.
Awesome rig, dude. The only thing I have to say about that is if you need to find a good trading platform, not financial advice, I'm just gonna say Thinkorswim is my favorite. If you need help with that, I'd be more than happy to walk you through. But anyways, dude, seriously, like, that's an awesome rig. Love it to death. Love your Drunkenomics merch.
As Monday champion. Monday like a Drunkonomist or an Econoholic. Take your pick.
Yeah, however you want to do it.
Actually, no, pick your side.
Yeah, exactly. But yeah, with that, if you also want to, just leave a tip in the tip jar. Anything there is much appreciated. Additionally, anything with our merch is much appreciated too. I mean, the fact that you're just drinking with us, that's very much appreciated.
Still pretty sweet.
Yeah, but if you want to check us out on Patreon, patreon.com/Drunkenomics, DRUNKNOMICS. We do have to pay for editing services. We do have to pay for distribution services. So if you want to help us just break even there, that's very much appreciated.
Yeah, I guess let's put it this way. You help us break even, we'll help you, I don't know, get through Tuesday.
Yeah.
Or Thursday, more likely.
All that does is really just helps keep the lights on.
Help you.
Yeah, exactly. I mean, but all it does is it really helps us keep the lights on, the liquor cabinets,
the ice frozen, the lemon peel sour. Yeah, no, our zesty, but most importantly, at the end of the day, it just helps us.
It helps fill and kill, not brag, just say, play chess, not checkers. But most importantly, it helps us do what?
Well, it helps us help you. No, it helps us stay drunkenomical. So stay drunkenomical, guys. That's all. Woo.
There it is. Helps us all stay drunkenomical. I love it.
Uh-oh.
Cheers, my friend.
Right now, I definitely know about the drunk. I don't know about the anomical at this point.
Either way.
Stay drunkenomical, guys.
Cheers.